Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another great episode of We Build Great Apartment Communities, the only place where you come to learn how to take apartment buildings and turn them into amazing communities. I am your host, John Brackett. Welcome to the show. I have another great guest on today. Her name is Melanie, and today we're going to talk a little bit about, what Melanie does and the opportunities that she is finding and placing herself in or positioning herself in. Melanie McDaniel, welcome to the show.
Thank you. Happy to be here. Nice to meet you.
You're very welcome. Happy that you're here. So, hey, today let me start by introducing you to our audience. Okay, so Melanie is the founder of Freestyle Capital Group, a boutique private equity firm and Freestyle Fund, which is a customizable fund. She partners with passive investors to invest in private equity real estate transactions across a variety of asset classes, operators, geographies, and investment strategies. Melanie offers a Michelin Star experience with curated investment opportunities and aims to have a personal relationship with each investor. Okay, great. So a lot of condensed into like a small paragraph there. So we're gonna break some of that stuff up. But why don't you start by sharing your background, and we'll just flow through this.
Yeah. So grew up in blue collar America, Utah to be exact. Joined the Navy at 17 because I didn't know what I wanted to be when I grew up, but I wanted to travel, get money for college, get out into the world, get on my own 2 feet, and mostly travel, honestly. This will be a theme probably that will come out through my whole story. But joined the Navy. My first duty station was in Italy, so check in the box. I won big on that opportunity. And then I commissioned the Ronald Reagan, got out, didn't know what I wanted to do still, but I knew that I loved travel. So I studied travel administration. So I have a bachelor's degree in travel administration.
I didn't even know there was such a thing.
In the US, it's not as common. Overseas, hospitality is actually a big line of work.
Oh,
but
so
in the US,
it's
not
hospitality. So much. Got it.
Yeah, the actual degree is called Hospitality, Meeting Planning, and Travel Administration, and my concentration was travel. So they're meeting planning, like wedding planners, and
right.
Now that school, it's in Denver, it's Metropolitan State University. They have brewery as part of the hospitality, so brewing beer. And I bet in Colorado they probably have like how to grow weed now because it's Colorado. Who knows? But it was actually a really cool path, I guess. But my focus was travel. But then, I was working in the travel field. I was working on a submarine out in Waikiki. And I just felt like this dead end job sort of thing. Didn't really have a corporate ladder to climb. Felt like I was wasting my time. And as trained by society, I decided to go federal law enforcement. I was a park ranger and did that for 9 years. But then, of course, read Rich Dad Poor Dad, which really threw me off track, and jumped ship as quick as I could and got on the path of entrepreneurship, specifically investing in real estate. So started as an agent, always knowing I wanted to go bigger, started buying apartments, didn't really love all of the jobs on the GP, realized I really just love to place debt, find investors, not place debt, sorry, place equity, not debt. Yeah. That would be my other partners, and just help people that are normal, average, everyday people invest like the wealthy do. And that is through private placements. And that's where I've ended up, even starting my own fund.
Very, very nice. So did you say park ranger or a ranger, an Army ranger?
Park ranger.
A park ranger. Where? Out of curiosity, what state, what park?
So Arches National Park in Utah, Mojave National Preserve out in California. And then I did most of my time at Santa Monica Mountains National Recreation Area. And my address was Malibu.
Very, very nice. So Santa Monica, what a cool place that is.
Yeah, but it's not Santa Monica. It's Malibu and Calabasas and Agora.
Even better. Malibu is one of our favorite spots. I take my wife and kids up there all the time. I mean, we love that place.
Yeah,
that's one of our spots. What a cool place. So do you know where Los Osos is up in Malibu? The Los Osos Park?
That's a state park, right?
Yeah, that's our favorite national. Favorite campground. All right, so thank you for giving us that background. Right. Sure. Now we're gonna talk through a couple things here. So let's start off by, maybe creating a helping our audience understand a distinction in what you do from being an operator to, in this case, you said, hey, look, I love helping clients who have a desire of, who have the desire to get into this business and make investment in apartment buildings, right? I like helping people do that. So can you talk about that a little bit? There is a distinction, right, between being a full-time operator and then, of course, you're placing capital out there in the marketplace. So can you speak to that?
Yeah. So when you take down a large multi-million-dollar property, it takes a team. That's not a one-person job. And some people, especially the bigger the deal is, the more refined your skill needs to be, right? So some people are really great schmoozing brokers and finding deals and getting deals under contract and getting that deal to the closing table. Some people can step in with net worth or liquidity or experience to back the loan and help the lender feel cozy. Some people are really good at managing the asset once it's closed, managing that asset, putting the business plan in place. Some people are probably good at the construction management piece specifically, not just asset management. Then there are people who are good at bringing in the investor capital. They're relational. They can go out, they meet people, they mingle, and they teach people about the investment, because not everybody knows, one, why real estate is so great, and even less know what syndication is and why it's lovely. So those people go and meet the investors and bring them into the deal. So I have learned, for me, I really love meeting the investors, and why I'm not just on one team that just buys real estate is because I want to be selective with my sponsors. My number one priority is protecting my investors from what they don't know. It's amazing how many passive investors there are that don't even know that they should be conducting a certain level of due diligence to protect their own principal. So I step in and I do that for them, whether they know it or not, or whether they even know that they should be doing it or not. It doesn't matter. They see a nice deal, they like it, they'll do their due diligence to their ability or their knowledge, but I'm in the background really digging in and doing the due diligence. So I get a lot of deals across my desk with a lot of really great operators, but when I dig in, if the deal does not pass my test, I don't do it.
Okay, so let's talk about that, because I think that's a really good topic, right, is due diligence. And then, of course, you have your criteria through which you look at deals through. So it sounds like you're getting some pretty good deal flow. So what does that criteria look like? I mean, what are you underwriting to, and what are you looking for?
So at a high level, there's 4 main areas I look at. The first one being the jockey, the actual sponsor. Who is a sponsor? What's their track record? What were they doing in 2008 and 2009? And if they were in grade school, then I'd like to know now, in today's economy, where everything's been butter for the last 10 years, like what are they doing about it? If they didn't go through that pain of 2008 and 2009, what are they doing to set themselves up for success if something similar to that happens again? Who are they? Are they good humans? Do they have good morals and values? Track record, I said that. Criminal background, do they have any bankruptcies? All the running of the background checks for the obvious stuff. Are they good people? Do they have great relationships with lenders or insurance companies, or how do they treat people? So that's a big piece for me. If something bad happened in a deal, which is always possible, anything can happen, right? How is that person going to act? Are they going to continue taking their fees? Are they going to keep paying themselves, or are they going to give it back to the investors? All of that stuff. So the jockey is a big piece. The underwriting is another big piece. And I, Melanie, am not like some magical underwriter. And I know that about myself. So I have a partner who does that on my behalf. And he is a professional, institutional grade, institutionally educated, and works at a decabillion-dollar fund at his normal W-2. I just get to use him, and he's my partner because we've been friends since 8th grade, and that's just how things roll when you're friends for so long. He works for me, right? No, he works for me.
He's part of your team, right? He's part of your team.
He is literally a partner on my fund. Yes, he does have a W-2 and a distillery, and he's a single dad and all the stuff. So for what he does for me, he stays in his lane, which is underwriting. I stay in my lane, which is managing and running the fund and all that stuff. So, and talking to investors and finding deals. So that's 2 of the things. And then next is market research. What are we buying? Where are we buying it? I know you're in California, so I'm just going to throw it out there what I love, and don't get offended, but I like landlord-friendly states with lots of economics coming in, job growth. I like to see that there's an affordability, right? The people's average income is matching the product that is coming online. What's the supply and demand? are jobs coming? Is it hitting those top lists for, typically they move from top left and right of the US to straight down to the warm climate. I mean, what are we receiving? So for me, it's the Smile States, specifically focused on Central Texas. I love Arizona, I love North Carolina, always open to the Southeast in general, but avoiding flood zones. So I don't do a lot of the coastal, even in Texas, I try to avoid the coast for the most part. And then the last thing is when I look at a deal, I look for fees. I look for hidden fees and structures. Because when you watch a webinar, you look at an OM, that is not the offering. That is not what you're signing your name to. It's that PPM, operating agreement, subscription agreement, where all the fine print is, all 150 to 190 pages of it. A lot of investors don't read through that. They're just like, well, I watched the webinar and they said this, this, and this. Well, they didn't say that they're going to have an acquisition fee, an asset management fee, a construction management fee, a refi fee, a dispo fee, a fee for travel, a fee for whatever the heck they want. Like that is what you discover in that PPM, operating agreement, and subscription agreement. So those are the 4 overarching things that I really dig into on behalf of my investors.
Okay, good. So let's kind of dive into that a little bit further, right? So that our audience can have maybe a better understanding, for example, of what some of that high level stuff means and how it impacts them personally, or in this case, financially, especially when you're making an investment decision. So let's start with good people. So how do you qualify for good people? Because that's a very difficult one to qualify for, because usually it takes some time to really get to know who someone really is, right? Now, over the years, I've learned a couple of ways to speed that up, but needless to say, it just takes some time, right? So how do you, because everybody is going to show up really, really great when they're being interviewed, especially for capital. So talk to us a little bit about how you do it. I think I'm really curious because I think that's very important.
So how I do it and how a passive investor do it are probably quite different because I have all the time in the world to invest doing it. I go to a lot of conferences and not just to sit and listen, which I do, but to network. I want the dirt. I want to talk to investors. I want to talk to partners or other, people in the business where, there's a lot of stuff that happens that we never hear about. Why? Because people settle out of court and then nobody talks about it, right? Because nobody wants to be charged with slander or accused of it, and nobody wants to be wrongly accused, right? So there are bad dealers and you never find out because they don't go to court. They end up settling out of court. So I spend a lot of time I don't want to use the word gossiping, but people talk. When a deal is going south, when people are about to lose money or whatever, people talk. But they don't just talk on social media and talk to everybody. They talk to each other. Conferences are a safe place. Meetups are a safe place. Phone calls are a safe place. Masterminds, things that I invest a lot of time and energy participating in. So I know a lot of people. I know a lot of people. I love them, but I would never do business with them because I've seen their underwriting or I've heard their investor complaints. And it's not even just deals are bad, right? It could just be, well, their communication wasn't good. I don't want to raise capital for somebody who doesn't communicate numbers or they're not transparent with things because I have to communicate that stuff to my investors and I want to be transparent and communicative with them. But if I don't have the information, I can't do that. So I listen to things like that, not always just, oh, the deal went bad. No, it's, yeah, I mean, I made money, but they never communicated with me. So for a passive investor, yeah, you just need to spend time with your operators. And for passive investors, it's more quality, I guess. For me, I turn in and burn in quantity of sponsors and meeting them, seeing their underwriting, and throwing them out as quickly as possible. It's just a quantity thing.
Okay. So what would be maybe 3 tips you can give our audience about, being able to vet out good quality sponsors or how you put it, good people? What would be maybe 3 tips that you could offer up?
Well, for sure, referrals, other happy friends or family members that have invested and they've had a good experience. I think referrals go a long way because that person is speaking from their experience. I would say if they have some time to invest, I would go to maybe a local meetup or something so they can get involved in a deal that is local to their market so they can go see it, have boots on the ground, get to know that person better. Or I guess if they follow someone on social media or has a platform long enough, maybe they'll build some trust, but that's not always an indication of success and a good business.
Social media? Are you kidding me?
Well, some people some really great education. Some of these guys putting out books full of knowledge of how to run due diligence or whatever. I feel like if I'm not saying every person with a platform is a good person at all, because there are some big platforms out there that I would never do business with those people. But in general, when you're getting educated by someone, you're going to learn. If you watch their YouTube videos or you listen to their podcast long enough, you'll get a feel. Are they slimy? Do they say wacky things? Are they consistent? Are they actually teaching you, or are they just fluffing, filling you full of fluff? I mean, you ask for tips. I do this professionally. I'm thinking a passive investor, they just need to call me. Okay, there's the tip. Call me. But
all right. So, okay. So I'm going to add to that. Okay. I'm going to add to that because I think learning how to qualify people to invest with is really important. Even on the deals that I place capital for, obviously I have to do that. But a couple things. Okay. And I'm going to add to that is one, banks are really good at this. So I don't know why we don't kind of replicate what banks do, but I think it's really important to ask for a personal financial statement, right? Because what is the likelihood of someone making you money if they themselves haven't done so? I mean, that to me, that's just an oxymoron. If someone can't manage their own personal affairs, the likelihood of them being able to build wealth for me, highly unlikely. And I mean, that's almost a guarantee. Not too many guarantees in life. That one, it almost is. Mm-hmm. So that's one. Another is earn. And you touched on this with I think you talked about the 2008, 2009 crash. That's where our business was born. We've been doing business for 14 years now, and we started in that era, right? Kind of a long story. But the point there being is understanding how people perform under pressure is extremely important, because inside of this business, things are not going to go perfect all the time. They just don't. And when you're managing someone's money, you have to be good under pressure, and you do have to be good with people, because oftentimes there are two things that usually happen, right? You have to help protect the investor from themselves when you have to start making really difficult decisions, and you also have to be able to manage your teams forward through challenge. Because if everybody bails, then you're in a you're in a worse off position. So I'm speaking to experience from that. So those are some things that I like to add, because I think what you talked about with good people is a really, really big one. And I really appreciate you bringing that one up, because I think it's critical. Okay. So let's now dive into some market research. Mm-hmm. Okay. Market research, a really good one. So why is market research important for you on behalf of your investors, right? Because you're doing your due diligence. And you're doing your market research to protect your investors, to make sure that they're getting into some good deals. So can you talk a little bit about that, the market research aspect of it? Why is it important? Why do you do it? Maybe what are some, 3 takeaways that you can share as well that'll stick with our audience?
Yeah. I mean, when there are jobs for people to have, then if they have a job, they can pay their rent. So that's like the basics of it, right? And population growth, people coming to a market with job growth is great. And not just population growth, but household formation. Just because babies are being born doesn't mean they're providing for the economy, but household formation, who's moving out and going out on their own. And then the cost of living to what the income is, there should be a nice spread there. If all of their income is going to rent, or at least when you look at the economics, that the price of rent versus what the average person makes.
100%. Yeah.
Yeah. So market data, you can go to like city data, or if you can afford to get a CoStar report or Yardi report or something. Most passive investors don't have access to those things because they're paid services, but a broker you can ask for that from their sponsor, and whatever the deal is they're looking at, ask for the Yardi or the CoStar, whatever service they have that's going to tell them market rent, tell them the average income. Population growth can be found just by Googling population of whatever. And in Google, it shows you in the last 10 and 20 years or so, is the population increasing? The government, landlord friendly versus tenant friendly is something I pay attention to, because if something like COVID happens and there's moratoriums, are you going to be able to evict tenants or not evict tenants? Are they going to put rent caps on what you can raise rent when the market is going insane and inflation is going insane? Can you raise your rents to stay with market rent? So governmental type affairs is something I pay attention to. So yeah, those are the things. We want growth and jobs specifically, and population growth, and then government supporting. I mean, there's a lot of money to be made in, we'll just call it California, New York, right? or those states. There's definitely a lot of money to be made there. So if you are going to invest there, just understand the market and the economies and be okay with what, the landlord versus tenant friendliness is.
Yeah, so I'm going to share some. So a good buddy of mine, I was talking to him yesterday, and he was, I think they focus predominantly on mobile home parks, mm-hmm. and I think right now he's up to 7,500 lots, and 4,500 lots, but they're acquiring a portfolio of about 3,000 lots, right? Big portfolio. So as we were getting into this discussion, I was pretty fascinated because in New York's, not a very landlord-friendly state, and not to mention he's buying parks there. So I was asking him, because they're buying into really low cap rates, right? But they're big for portfolios, 4% cap rates. I go, man, help me understand, how are you guys making money on this stuff? I mean, what's the play here when you're buying into a mobile home park, granted portfolio at a 4 cap? I said, he goes, well, we have to have a little bit of running room, right? We have to have some room to run, meaning some room to raise rents. So as we were talking, we got into this discussion, and they have rent caps there in New York, right? So I go, well, so what is the restriction? He said, well, we can only raise rents by roughly 3%, and then we can add a margin on depending on what's going on in the markets. I go, wow. So the point there being is they don't have a lot of room to play with, right? I mean, it's a very regulated growth pattern for those types of investments. And so what you're saying is, hey, I look for markets where we don't necessarily have that kind of regulation.
That's what I love about what I do, because I don't have to stick to a market. I can just go with the flow where things are the best economies. And in general, I like a diversified portfolio. That's why I made the customizable fund. So you can diversify geographies, operators, asset classes, and even investment strategies. Are we investing for cash flow? Are we investing for upside? Is it development? Is it steady class A, low debt, long-term loan? I mean, I think we need to diversify. So that's what I love about what I do. And investors should, if they have the opportunity to diversify, don't put all your eggs in one basket unless you really, really, really know that market, that asset class, that sponsor, and that's what you want to do. Fine.
Unless you love that basket, right?
Right. Or you just really know that basket. I mean.
Hey, so let's talk to us a little bit about your fund, right? You said you have a fund. And it sounds like I didn't catch the last part, but that you can diversify. So can you talk about the fund, the structure of it? What about the fund allows you to do that? Maybe that's a kind of good segue.
So when people hear fund, sometimes they turn off because they think it's a blind fund that they invest and I go and buy and sell whatever in my fund, whatever I want. But that's what's called a blind fund. My fund is not blind. It's open, meaning it's evergreen. I'm constantly taking in new deals for like 10 years is kind of the length of the fund. And I can bring new deals in for that period of time. But how it works is the fund it's its own security. It's a 506c 3c1 fund. So the fund invests in other securities. It's a security that invests in other securities. And it's kind of like a mini syndication. So I will go and grab like $1 million carve out of another sponsor's deal, bring it to the fund, and then people will say, hey, I like that deal. They'll invest in the fund. Now, when they invest in the fund, it's just in cash until just on the software, they go in and allocate their funds to a specific deal. So if I bring in a value add multifamily and they like it, they're like, ooh, I like that that deal, here's $50K. And then I bring in a storage unit and a mobile home park and assisted living. And they say, you know what, I like storage, I like assisted living. I'm not too fond of the mobile home parks. They can invest in the fund and allocate just to those other 2 deals. So now they are invested in 3 of the 4 deals. And now they're creating this nice little diversified pie chart, right? It's like Robinhood for syndication. You create your own little diversified portfolio. And the beauty about it is the software calculates which investment and for how long they've been in each investment. And at the end of the year, it spits out the report. And that report tells the CPA what to issue as far as the K1 goes. You get 1 K1. You can be in 20 deals and get 1 K1. You get all your pass-through tax benefits, you get all your equity, all of that stuff, and it comes onto 1 K1 because the fund is the security that they've invested in.
Sure. Okay. The Robinhood analogy. I like that. I like the Robinhood analogy.
I mean, it's literally that comes out as a pie chart, and then there's a map, and it's like, okay, you're in Arizona, Texas, and Delaware, or whatever. It shows them on a little map how diversified they are geographically, shows them asset class wise how they're diversified, and they get to pick. If they don't like a certain asset class.
I know reporting can sometimes be a challenge, right? When you're operating like that way, accounting. I know there are a lot of firms out there that, well, really not a lot, but there are firms out there that specialize in reporting for, for funds or for securities. So are there specific CPA firms that you would recommend that just focus on that type of reporting?
Not for reporting, because the CPA would just be taking the data from the software and issuing the K1s. But when it comes to fund management, bookkeeping, and fund accounting, so my fund is new. We just closed. We have our first deal in there. So as we grow, then I will wrap in a fund manager. And I am looking at one person who is a controller for a large fund for a while now. She's kind of a syndicator wanting to kind of just do consulting for 1 or 2 funds. So I'm looking at bringing her on, but I don't really have a recommendation necessarily for like a CPA.
Well, really, there are accounting firms that do this. They do outsource accounting for these type of funds. I just wanted to see if,
Yeah, at the moment, no. I'm still doing my own research to figure out who that is. I do think I know that I will bring her on. And then I have a number of CPAs that I need to interview because they need to be okay with the software and be able to produce the K1s. It's not just your CPA that might do your W-2. They need to be specify, know what funds, how funds operate. But I did read an article today with what is the Wall Street Journal, I guess. Yeah, Wall Street Journal. And the SEC is they're toying with the idea of requiring private firms, private placement companies to actually do reporting. So that's kind of on the chopping block right now as far as a change with the SEC, which is fine. I mean, my investors have access to all the financials, but it's going to require it.
Yeah, it's going to make the markets a little bit more, it's going to make the business a little bit more expensive, right? But I don't think that's a bad thing. I think that's a good thing, but there's a cost associated with that. I think it creates a lot more. I know what they're doing. They're trying to create more transparency because, they're some of the challenges are starting to unravel.
Yeah, I don't think they're trying to attack syndicators or small firms like mine. I think they're trying to go after hedge funds, VCs, where these fund managers, they're making many millions of dollars in fees and all that stuff, and it needs to be disclosed. And it doesn't mean they're doing anything wrong or that they're bad, but I think investors should know. They should know what the fees are, just like the stock market. Anything publicly traded, you can go in and look what all the fees are. And in the private arena, we haven't had that sort of requirement. It doesn't mean what people are doing is wrong. They're just saying it should be disclosed. So, I mean,
the fees are disclosed. I think what they're doing is they're just trying to make the reporting, a lot more transparent, right? They're trying to add another layer of eyes to the reporting, and we'll see how that works out. But I get it. Just improving transparency. Yeah. Nothing wrong with that.
Yeah. I mean, it's fine because I'll share financials. I like to see financials as an investor. So I want my investors to have the same thing for my fund. People should see, are you buying pencils with my investment? Or are you just keeping it to fund expenses. Like, what are the fund expenses? So you have to disclose all of that stuff.
Yeah,
People
no, exactly.
flying first class and
that's a good thing. Okay, so Melanie, we're at the end of our show right now. I want to thank you for being on. You've been a tremendous guest. Thank you very much. Really excited to have you on, and I want to wish you continued success. I know you're going to continue to be a trailblazer out there in the marketplace. What is the one question that you have for me that you feel can add some value to our audience?
The one question for you, or the one question? Oh,
yeah, because I've been asking you questions for the last 35 minutes. So here's an opportunity for you to ask me questions.
If an investor has never invested before and they're considering this, want to pull out of the stock market a little bit, what's their first stop for finding either education or finding a good investment?
So if they want to pull out of the stock market, you said,
maybe they want to diversify out of the stock market. Maybe private placements are new to them. They want to be involved. What is the first thing that you would tell them to go start educating themselves on?
What I would have them do is really simply just put together if they don't already have a personal financial statement, start there, right? Because again, it's going to be really difficult for you to make money if you don't know what your own money's doing. So oftentimes what ends up happening, and as I get into these conversations all the time, someone will just because someone is managing your money, that doesn't absolve you from the responsibility of knowing what's going on with that money, right? Whether you're placing that through a broker, a certified financial planner, whether you're placing it through a fund manager, it doesn't absolve you from having to take on the responsibility to know how they're placing your money so that you can actually hold people accountable. If you yourself don't know what your money is doing, it's not going to grow. So before you start looking at education, right, multifamily and going to this person's seminar and that person's seminar, my recommendation would be just start off putting together a personal financial statement so that you yourself really understand what your money is doing, because then you can make better decisions with it, right? If you're really clear on how much cash you have, what your liquidity looks like, how much equity you have, and what that equity is made up of, then you just can make better decisions. And so I always tell people to start there. I mean, that would be the first place to start. And it's a really simple step. Initially it may seem a little painful, but what usually comes out of that is this, right? Is now as a individual, you actually take on the responsibility now of being an investor who actually understands what you can and cannot invest in, because you're already clear on what you actually have, right? What kind of liquidity you have and what kind of liquidity you do not have. And that's going to allow you to make better decisions with other investments, whether they be in, I always love this, Wall Street, how they called it a security, stocks or bonds, and, of course, real estate, right? So that would be my suggestion. Start with you. Grow your own human value first before you decide to make an investment in someone else.
Got it.
Yeah. So that's it. Hey, well, thank you so much for being on this show. Really glad to have you. Really appreciate you being on. Great questions, great conversations, some really, really good tips around due diligence, getting to know people before you actually make an investment with them, or understanding or learning rather how to vet them out, right? The importance of that, the importance of market research. And then lastly, we talked through some ideas and concepts around why it's important for you to start off knowing for yourself what your own personal financial situation looks like, so that you can get better at managing your money when you're placing it through someone else. So Melanie, I want to thank you for being on. You've been a tremendous guest. I want to wish you continued success. And I look forward to connecting with you at some point in the future. I'm sure we'll run into each other. It's a small world.
Yeah, sounds good.
Okay, thank you. Okay, take care of yourself. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.